All right, good afternoon, everybody. This is Harmeet from Sigma Picks. Thank you for tuning in. I really appreciate it. There's a lot to talk about. Let's get to it. Last time we were here, we were looking at a few different things, and we were deciding where, or looking at seeing how and where the market could go. We were about at this point in January, and at this point, we have gathered enough data to say, kind of say where things are within the Elliott wave structure world. So let's look at that quickly. Again, what an interesting last few weeks have been. We've seen some downturn, we've seen some lots of volatility, up and down volatility, and can we expect this to continue? Absolutely. Though we are, for at least for SPY, may not be as volatile as QQQs, but definitely Qs are in a larger downtrend than the SPY is. So where is SPY? There's a few things I want you to take note of. First, look how deep this pullback was, the primary pullback. Okay, that's one of the things I want you to keep in mind as we keep going. And I want you to look at this second rise and rise and run, and then see how far we actually dropped back. Again, look at where and how deep this pullback has been. So just also know that we are below this the first wave, and also this is straightforward indicative of that we're coming to an ending diagonal that just says that things are coming to an end in a larger wave area. We're in the fifth ending diagonal this time, and don't expect things to go much further before we see a larger downturn somewhere. And again, don't worry about the prices. That has not we have not come to that part yet. For now, just know that we are in an ending diagonal for SPY, and we can expect things to kind of change soon. Very fast. So where are we? We are coming to an end of this. Let's quickly look at that. So we are coming to an end of the third wave of this larger structure right here. Okay, that's where we're at. And so just keep in mind that as soon as we are done with this, again, we are 1, 2, 1, 2, 3, 4, 5, and the third, and then the fourth, and so forth. So we're kind of getting to this zone again, where the third wave of this larger structure is going to end soon. So just be aware of that. Know that we still can go up, but the chances are that we're going to see some sort of consolidation coming soon our way that is more than just this downturn. Of course, I am expecting the price to get higher. I am expecting to say price gets to 400 and maybe 410. I'm not sure yet. So this area we want to kind of keep an eye on between 400 and 410. That's, I think, where we'll end our the larger wave of 3. So boy, lots of action, lots of fun, lots of up and down action. So that's the way the ending waves work. They're gonna be not as significantly going higher as the third or the first wave, but this is coming to an end. Let's look at Qs real fast. So Qs are in actually more of they've ended their larger structure, the third wave, and now they're in a longer time wave, fourth wave, which is I'm fully expecting tech to get sold off or stay in consolidation for a very, very, very long time. How long? I can't tell you. Can it go higher? Absolutely. But why am I expecting the tech space to come down? I would actually implore you to go ahead and start looking at commodities. I want you to start looking at bond rates. I want you to start looking at the interest rate, the yield curve. All those things are telling us, in the Elliott world, is confirming is the fact that the risk assets may not be as attractive as they were a few years ago. Okay, it's just saying the environment is changing, the world is changing. There's going to be a lot more weight on these type of assets versus say commodities, as people have seen already how crude has gone up, or how well lumber is doing. Look at steel prices, look at things like that that are actually, we're in this grander cycle where we know that risk assets are not as attractive as they used to be. I mean, just looking at the yield curve itself, is steepening. It's happening. It's gonna peak out at some point, and as soon as it starts to peak out, we know the interest rates are going to be going up from the Fed. Okay, it's just been a proven fact. Other things that you want to look at is, well, there's a lot of moving parts. So let's just focus on the things that I had mentioned, the commodities space and the yield curve, and looking at the actual yields itself, to see, where we can stand with these riskier assets, such as that are presented in this index of QQQ. We saw the 10-year yield spike up to 1.6. Can it go higher than that? Absolutely. I'm expecting it to go to 1.8 to 2.0. That means that we're going to see a lot more downturn into riskier assets. We're going to see a lot more selling off of Qs. We're going to see a lot more of people rotating their money out of these riskier assets and going into more of a commodity base, which has already started space. So just let's keep an eye on all of those things. There are a lot of moving parts that are happening. There's a lot to do, a lot to think about, but just don't be obliviously buying stuff where you think that it's just going to keep going up and up and up and up and up and up and up, and that's not going to happen. I'm going to show you where we are. 1 2 3 4 5. Let's see if I can even go back that far back. So this is the larger wave that has, at least in my view, ended. Okay, this was 200% rise. That's quite a bit. That is quite a bit, and we can expect the fifth wave in this fourth wave to be, continue on maybe into May or June, but we don't know that. But it's definitely saying that there's volume coming in, and we'll see how it goes. Okay. All right, so let's look at IWM real fast. Let's go back. I'm gonna fix this where we are. All right, IWM. Much better spot. It has been in much better spot since last fall or so. I still continue to think the IWM is going to keep outperforming QQQs. I still think that you can expect it to go higher. There is going to be a lot more small caps that are going to be, at least in the near term, going to see a lot more influx of funds coming in as Biden's COVID relief is targeting these smaller businesses, and we'll expect that to continue into this, at least this structure to continue into well into the fall. Let's look at where we are. This is the most interesting part. So we've been in this fourth wave that ended. Now we're in the fifth wave, and now we can see that we've entered into what is called the 3335 money wave, and that is going to be very interesting to see how far we can get. Maybe we can get to 255, we can get to 260, we don't know yet, but I will be keeping an eye on this zone, 255 to 45 zone, to see how far that goes. Let's quickly look why I'm looking at that. It's just is this expansion? I think this is expansion. So let's get out of that. Let's look at extension. Or look at expansion. So yeah, 245 to 240, 250 to 240. This zone is going to be what we want to keep an eye on. Right now it is hitting a cluster. It is 50% retracement. It hit a bigger cluster right here for the 2-1. So it's definitely worth looking into, something for you to keep in mind. I am going to be looking more into RUT futures, looking more into investing in IWM in the coming few months, and also be looking at how the yield curve is doing. I will also be paying attention to commodities as they're starting to outperform all over the place, and I hope this makes sense. If you have any questions, you can always send me an email, harmeet.sachdeva@sigmapix.com, or you can write a comment down, and we'll go from there. Thank you so much for tuning in. I really appreciate it. Have a great day.